Good morning, everyone. How you doing today? Mike Zuber, author of One Rental at a Time, back with Mr. Greg Dickerson. How you doing, sir?
Doing great, Michael. How are you?
This is an important conversation. If you've been watching investing, you've been thinking about real estate, you own some stocks, you're trying to figure out what happened from the March lows to now, and you just don't understand PE ratios and all of that. Well, what you've had a Federal Reserve induced rally. You've had federal induced inflation in assets. And this can't go on forever. They've eventually have to turn off liquidity. They have to try to reduce bond purchases. They have to start talking about raising interest rates. And history tells me that simply them talking about is going to start a cascading of dominoes that may shock a lot of people because it's going to take assets the other direction. What do you think?
Yeah. They're not just talking about it. They're talking about it. So,
Yeah, it's
the
true.
first thing they're talking about is, excuse me, the bond purchase program, taking the foot off the gas there and slowing that down and easing into that versus ripping the Band-Aid off a year from now. So a lot of the central bankers, and understand how the central banks work. There's a board of regional central banks, and they have central bank heads in those different, regional banks. Then there's the, main central bank in DC. So this is a board. So everybody, comes out and has these discussions. And, there were discussions today about digital currency that one of the central bank, chairpersons were talking about. And the other day, it was another one talking about taking the foot off the gas of the bond purchase program, which affects interest rates in the housing market. So that's what we're really talking about, is what's going to drive interest rates. It's bond rates. And what they're really trying to do is they're trying to push yields up in bond rates, which drives interest rates up, which also affects the stock market, because right now low bond yields is what's pushing the liquidity into the stock markets and into cryptocurrencies. That's what's driving those asset bubbles. So once, treasuries go up, bonds, once those rates go up, that money now will go back into bonds, especially if you start pushing 2-3% in that range. A lot of people say, oh, we'll never see a 3% bond. Well, we're almost at 2 here
Yeah.
lately, a 1.75, right? I think we've been looking at in the last couple of auctions. So if you start getting up to the 2s or 3s, well, that money's going to come out of the markets and it's going to go back into bonds. They're just in risk assets right now because they have to be, and they have no other choice. So,
Yeah.
Again, the key is listen to what they say, but watch the markets. Okay. The markets are never wrong. Okay. And whenever they start talking about tapering or talking about raising interest rates, which there's a lot of central bank heads that are saying we need to raise rates this year.
Yeah.
Okay. You see the markets start to taper a little bit. So it's starting to get baked in. You've heard the term baked into the markets. So listen to what the Fed is saying, listen to what the central bankers are saying, but watch what the markets do, because the markets are never wrong. And if you see markets start to taper, just like we talked about, if you see yard signs start to pop up as interest rates rise, then you know what's coming. And that way you can stay ahead of the changes.
Yeah. One of the things that's going to be very interesting this Friday is the Federal Reserve's favorite inflation gauge. It's called the PCE deflator, I think it's called, or deflation index, something like that. But basically it's their preferred method for tracking inflation, because we saw, I think it was last week, it was the week before, where CPI and PPI came out hot, right? But those aren't really metrics that the Federal Reserve looks at. So the PCE metric on Friday is going to be interesting to watch. And by all accounts, it's gonna brace through 3%, right? They've been trying to keep it above 2%. 2% is this magical number where, it's just enough inflation where all this debt they've printed, they can sort of, deflate away with cheaper dollars in the future and not hurt the, consumer too much. I think it's going to be interesting to watch. I think it's going to be a wake up call. If it comes in above 3%, Jerome Powell has to talk. If it stays low 2s, he can keep saying transitory, which I don't buy it, but you will see. And just for reference sake, it was 1.8% last month. So it'll be interesting, because I think inflation is here. We see it gas station, California, gas is almost $5 a gallon again. It hasn't been that since, a long time. Everything I buy in this grocery store, Home Depot or Lowe's, everything is more expensive.
Yeah. And, he has talking points. He's got a job that he has to satisfy. He's a politician. So again, it's not what they say, it's what they do. So he's going to say transitory. He's going to deny inflation.
Look over here. Look over here.
Right. But what does Janet Yellen come out and do? She comes out and tests the water. she throws the bait out and
Yeah.
says inflation. And what happens?
Yeah. Remember that was,
So, Powell can't say but so
No.
much because he knows that the markets are hanging on his word. So he's got to ease them into it. So again, watch the markets. The
Yeah.
markets are your indicator. The markets will translate what the Fed and Treasury are saying. That's where you get your translation.
Yeah. So for me, again, just so people hear, like when we say markets, I think the stock market reacts, you're Janet
Bonds,
Janet Yellen.
bond markets, stock markets.
Yeah. Janet Yellen was a great example for the average person. She floated this idea about, hey, basically, Jerome Powell, you're wrong. And the market rolled over within minutes.
Yeah. And I've seen a couple of your viewers ask, how do you track what the Fed is doing? Because I always say, don't watch what they say, watch what they do. So you can go to the Federal Reserve Bank's website and everything is there. The FOMC minutes, that's their meetings.
Yep.
So the minutes of the meetings are there. Their balance sheet is there. Everything they're buying, everything they're selling, it's all there. And you'll be surprised at their Bitcoin balance. No, they don't have Bitcoin. Not yet.
Not yet. Yeah. They'll have a digital currency soon, but it'll be interesting to watch. So again, I think the stock market is in for, I'll call it an adjustment sometime this year. I don't know when it's coming. You and I have a bet, as the viewers may realize, about when they take action. I'm saying next year, you're saying Q4 of this year. It's going to be close, I think. But I certainly agree with you. I think they start the conversation in earnest sooner rather than later. And that's cause an adjustment in the stock market.
Yeah, if we are correct in what we are seeing is that, inflation is not transitory. And I don't even know what their definition of that is. Does that mean,
is that September? 5 years? Can 5 years be transitory?
Right. Yeah. What does he mean by that? Is that September this year? Is it the end of the year? Is it, so once, they have acknowledged, we are seeing inflation, hyperinflation, we've got to take the foot off the pedal. Bond purchases will come first. You'll see that start to ease. Then the next thing they're going to test with interest rates. And, the markets are going to dictate how far they can go. And, then it'll just be a slow ease. And then at some point, anything can happen at this point. I mean, we're treading on such light water everywhere, or such thin ice everywhere, that, any kind of a crack in the system could deflate, the bubbles at any point. So it's very interesting times right now. And as hyper inflated as we are, moves can happen really, really fast to the downside. So just keep an eye on the markets, because they know what's going on. There's a lot of inside information there. You see the markets start to sell off, something stinks.
Yeah, there you go. Well, folks, this is very interesting stuff. We will do our best in the daily financial news to let you know what we're seeing out there. But yes, do your own homework, track this stuff. And again, remember, real estate's hyper local. Lots of stuff can go on in your market, maybe population growing, building boom, who knows? So Greg, any closing thoughts? And again, tell them about your YouTube channel.
Yeah. So gregdickerson.com. That's my website. All of my social media stuff's on there, but YouTube channel is just Greg Dickerson. You can go look it up. And, I put videos out every day. I'm starting to put some more out about cryptocurrencies and things, because people have been asking me about it. So I just want to make sure I'm all about education, right? Knowledge is power. So if I can leave anybody with anything, like, there's a lot of ways to make money right now. Especially, you can invest in real estate. You can become a developer. You can invest in the markets. You can go into cryptos. You can start a business, buy a business, freelance. There's a lot of ways to make money, but none of those ways will make you money. It's what you know.
Yeah.
And then it's applying that knowledge. That's the key. So educate yourself, understand your markets, knowledge, skills, abilities. That's where it's at.
And folks, if you don't know already, check the description below. I've actually spent some money. Yes, I spent some money. My cheap ass spent some money. I cleaned up my descriptions, and Greg Dickerson has a playlist link down there where you can go back and probably watch 100 of hours of us just talking about investing and helping people. So Greg, thank you very much, man. Have a great week.
Yep. Awesome.